everyone. We are starting the webinar now. Hello, everyone. Welcome to our Climate Change in AI webinar series. My name is Rafaela Koch, and I'm part of the Climate Change AI team, where I'm the community lead for economics and markets. So for those of you who attend your first event from Climate Change AI, we are an initiative that fosters impactful work at the intersection of climate change and machine learning by providing education and infrastructure, community building, and advancing discourse in this area. So CCAI conducts various initiatives. You maybe know already some of them. And the idea is to disseminate knowledge at the intersection of climate change and AI. We offer digital resources and coordinate a range of events, including summer schools, conferences, workshops, webinars, and meetups. We provided grants to support the establishment of programs, and we are actively engaged in policy conferences to foster discussions. And additionally, we bring together a vibrant community that stays informed through regular updates via our newsletter. So for more details, you can visit our website, Climate Change AI. By joining our community platform, you gain access to valuable information from CCAI and have the opportunity to connect with people interested in various fields of application. Our blog posts are available to everyone and cover a wide range of topics, including research applications and presentations from our team. And if you're interested in what we do, you can follow us on Twitter or register to our newsletter, where you will have various updates about conferences, funding opportunities, recent projects and articles, and job opportunities. So for today, our webinar timetable, the structure of our webinar looks as follows. So we have first a presentation of 15 minutes by our two speakers today, then followed by 20 minutes of a moderated discussion. And then in the end, you have the chance to participate in our Q&A with the speakers. So I would like to ask you to really add your questions in the Slido, and we will try our best to process them as we go. So so the idea is to have really a webinar that is interactive, and it would be really great if you connect to the Slido link, and there you'll be able to put your questions, and you can upvote for the favorite ones that will have a higher chance to be asked later. So with that, I would like to introduce our speakers today. So our first speaker is Vijay Rajendran. Vijay is an innovative leader and technology investor with a history of advising global companies, coaching startups, developing new markets, and creating innovative products and services. He is an instructor in the Climate Angels educational program for new and emerging angel investors in the climate space. And he has led a portfolio value of 500 global venture capital firm with 2.7 billion under management that invests in early founders and building fast-growing technology companies. He led a global team helping startups in over 80 countries, and their founders develop connections, raise capital, and create a thriving community. Previously, he led a venture studio for Global Bank and was a startup founder in fintech, in e-commerce, and was a management consultant. And Vijay graduated from Boston University and holds an MBA from Georgetown University. So welcome, Vijay. And our second speaker is Jennifer Turliuk. Jennifer is an entrepreneur, climate tech and angel investor, a technologist, an author, a keynote speaker, and a consultant. Her expertise spans strategy, marketing, innovation, product management, software engineering, venture capital, climate tech, AI, and educational technology. And Jennifer leads Climate Angel, which is an educational program on climate tech angel investing with team members, instructors, speakers, and mentors from venture capital firms and venture funds. And she is also a partner with Climate Capital Syndicate, one of the original most active climate tech funders in the world, with over 300 investments, where she sources and leads investments into climate tech companies. And previously, Jennifer co-founded and led Maker Kids, which is the world's first makerspace for kids, growing it into an ed tech company with clients like Twitter and Microsoft. And Jennifer also advises on the future of education at the University of Toronto, and she's the Queen's University in Singularity University graduate who earned awards like the Outreach Award from the Institute of Electrical and Electronics Engineers. So her writing can be found in Forbes, Business Insider, Strategy, and various newspapers, and her work has been featured in publications like New York Times, Huffington Post, Wired, and she has delivered keynote speeches at events such MakerCon Europe and TEDx. So with that, I'm very excited to have two very impressive speakers here. And with that, I would like to hand it over to you. Thank you so much for presenting here today. It's really a pleasure.
Hi, everyone. Thanks so much for having us. Really excited to be here. And I'm just going to share my screen here. Great. Can everyone see it okay? Okay, awesome. So yeah, we're really excited to be here to present about climate tech angel investing in the age of AI. And we're going to be going over three main topics. First, an introduction to climate tech investing. Second, how to leverage AI to assist with climate tech investing. And then finally, how to invest at the intersection of climate and AI. And super excited to hear any questions that you might have in the chat. So feel free to add those in. Just a disclaimer, none of this is financial or legal advice. I'm not going to read all of this, but you can check it out. We're not providing any sort of financial or legal advice or any representations or warranties. All right, so you heard a little bit about us, and I wanted to tell you a little bit about where we're coming from so you can understand more about us before we get into the material. So we run Climate Angels, which, as you heard, is an educational program about climate tech angel investing. And we had in our last cohort some great speakers and mentors from Planeteer Capital, Lower Carbon Capital, Voyager Ventures, MCJ Collective, Earthshot, Climactic, and others. And then we also are with Climate Capital. So Climate Angels is built in collaboration with Climate Capital, which is a really experienced and original climate-focused investment fund since 2015, one of the most active funders of climate tech in the world, with syndicates and funds with over 330 portfolio companies, including breakouts like Mosaic, Span, and Remora, exits like Amply and Blueprint Power, and co-investments with firms like Y Combinator, Lower Carbon Capital, and Khosla. And we have a network of actually now 3,000 climate funders, founders, and advocates. So really excited to be a part of that. And as you can see, we were one of the most active climate tech investors, and these are some of our awesome portfolio companies. So just wanted to share that as a bit of background before we get into the material, which is going to start now. So what is angel investing? For those who are not familiar, an angel investor provides investment money to startup businesses, usually in exchange for ownership equity in the company. Now, angel investments can actually range from as low as $1,000 to over $100,000. And with the advent of new equity crowdfunding platforms, you can sometimes angel invest as little as $100. And if you think about the climate tech capital stack, angel investing usually starts near the beginning of a company's development, or sometimes after, in the case of climate tech, some grants or corporate or private research and development. So usually happens around here where you see seed and early stage venture capital, or here where you see venture capital. And so angel investing has a different return profile and ownership profile than some other aspects like private equity or grants. Okay. And why should you consider angel investing? Well, it can be a great opportunity for accredited investors. Now, the definition of that ranges by country. So recommend checking out, what that means in your country. And it allows you to take the opportunity to support impactful companies that are changing the world, as well as to meet amazing people, to learn a lot, and then to open up potential career opportunities that could include advising, raising a fund, working in venture capital, being a board member, and so forth. And I just got a note about making my screen bigger, so I am just going to do that. Give me 1 second. Here we go. Okay. So why did I choose to do angel investing? Just as an example. So I chose to do it because I believe there's so many challenges facing humanity, and it's up to us to make a difference. And the way we can do that is through a number of different means, but one of those is through investment allocation. It's also a great opportunity to take what I've learned and help others, and the ability to make a broader impact by helping with multiple companies. So there's a couple different ways that you can find and evaluate angel investment opportunities. A couple sample sources of startups include platforms like AngelList, which is a very popular one that has syndicates like Climate Capital syndicates and other climate-focused syndicates, or AI-focused syndicates, or general syndicates. And syndicates basically allow a syndicate lead to say, hey, I have this investment opportunity. Who in my syndicate might like to join in with a check as little as $1,000? So it's usually as little as $1,000. So it's a great way to find deal flow that you might not otherwise, and be able to access those investment opportunities. And I mentioned there's also equity crowdfunding platforms too. And you can also look at other opportunities like investing into funds or finding deals through groups, associations, networks, conferences, your personal brand, if you put on your LinkedIn or other profiles that you're an angel investor, or through online research or other angel investors. And in terms of selecting them, I mean, there's a lot that goes into selection. Like I have a whole spreadsheet that I go through, but just as a brief overview, a lot of investors talk about 6 T's, which are technical, team, TAM, or total addressable market, timing, terms, and then traction. So, do they have LOIs? Do they have revenue? Now, in the case of climate tech startups, they may not yet have traction at the point of seeking angel investors. So you might want to evaluate other different ways of assessing traction. For example, how great is their technology? Do you believe that they can seek LOIs? Is their customer feedback indicating that they can? And like I mentioned, there's many other considerations. So if you're interested in getting started with angel investing, here's a couple different ideas. First, make sure you're financially qualified. I've listed a couple different books here. There's also some great courses, including Angel University by Jason Calacanis. We also have Climate Angels, is focused on climate tech angel investing. Figure out your goals and what percentage of your net worth you want to allocate to angel investing, and develop your process, which can always be refined over time. Join platforms to get access to deal flow, review deal flow, and then make your first investment. And you can also work towards doing personal branding with regards to angel investing, and networking with other co-investors to find investment opportunities, and then exploring direct investments where you're not just investing through a platform, but you're investing directly into the company, allowing you access to, for example, mentoring the company. And I mentioned, develop your process, or you can sort of just make your first investment randomly and then figure it out as you go. That's actually what I did. My first one, I made a very small one without a huge amount of diligence when I learned I could make small angel investments, but then I got much more diligent with my investments over time, and have now had some successes and exits from some of my investments. So that's exciting. And now I'm going to hand it over to Vijay to talk a bit more about climate tech investing specifically.
Thanks, Jen, and thank you so much to CCAI for having us today. This is quite a treat. So we're all on this call because we know something about climate, and I think we're all attuned to the urgency about addressing climate. But rather than share a graph that you have all probably seen in one shape or form before, but to highlight that the sense of urgency that we should have, I think it's to actually also express that in addition to looking at these traditional dynamics of those, 5 or 6 T's, like the technology, the traction, the team, the market, we're also thinking about this through the lens of how many gigatons of carbon or how much methane and so forth could be removed, or mitigated, avoided in some shape or form when it comes to the business and the strategy that particular founders and technology firms are employing. So we know that we won't magically get to lower emissions scenarios without some of these things, but a lot of people make ambitious claims. They're optimistic, and as investors, in many ways, we are professional optimists. And put our money where our mouth is. But that means we need to have our own expectations in terms of like how many gigatons might this remove, mitigate, or be able to address. So I wanted to highlight this graph for that particular purpose. If we go to the next page, and we've talked obviously about angel investing, and it's hard to see in the scope and scale of what we just saw, how big this problem is, whether or not this can make a difference. The fact of the matter is there are many ways to make a difference, and we need as many ways to make a difference as possible. So we know that the conditions that are going to enable progress towards sustainable development. And that means, okay, we need different ways of governance. We need to have, we need to have business changing its value chains, and we need to have people who can actually take steps towards ecosystem stewardship. We as consumers certainly need to change our behaviors, but finance and financing innovation is a really big part here. And it's one of those catalysts and one of these sparks that can create a chain reaction, we find, that can take us towards a much more survivable and livable future for all of us, where we can see the prospect of lower emissions, seeing systems transition faster rather than more glacially, see ways that we might reduce the profile of risk in general, certainly have relevant outcomes in terms of equity and justice. And that is different than if we just wait for large providers of capital, if we just wait for government, or we just wait for all of us as citizens to get our act together and hope for the best. So that's a perspective on why angel investing can in fact help. We'll go to our next page. Now, it's easy to look at the number of startups that fail. It's easy to look at the number of investing modalities and ask, does angel investing make a difference? The data says that it does. So firms that did receive high angel interest have a higher rate of survival. So you see 77% versus 54% of companies that didn't have a lot of angel investment. And in fact, you see 25% interest from angels, 25% of firms with high angel interest go towards an IPO, which is really significant when you think of that as returns for angels and results for those companies. Now, this is information that's been captured by some of the economic researchers out there. What we know, though, is that we want to give climate startups a a chance to put their technology out there, to have things work. And angel investing does have a material impact on survivability in terms of percentage, and also the average length of time to survive for 18 months, to get to a point where they have some traction that other investors downstream are going to be interested, that of course can bring more people onto their teams at a much higher rate. And with angel investing, you can raise the successful exit of that startup, not just because there's capital, but because there's probably other ways in which those angels are helping and are there to support the founding team. Let's go to our next slide. And then let's look at why invest in climate tech. So I've invested in a lot of different types of companies, from 3D printed furniture to fintech, and I'd say my first angel exit was in the travel space. So not saying this is the only place that anyone could invest, but what I have found is that there are huge promising opportunities in this space, and for me personally, it's also a way to make an impact. I should imagine that's a common theme for many of you who are listening. So there's the idea that you can change the world, and there are many of us who are trying. We can enable these breakthroughs. We're in a bit of a do or die situation for when we see the severity of climate change. But that being said, we see venture as a maturing asset class, and angel investing is a way for individuals to participate, assuming they're accredited. You can see how angel investing over time has allowed for us to evaluate things based on traction and technological readiness, so that you see things, if you can, be beyond a proof of concept. There may be areas of untapped potential that you see that others don't, and that's what all of us as individuals can bring in terms of our own knowledge and background to angel investing. Today, there are 43 climate unicorns and counting, which is exciting. And we're seeing that the time to reach that billion-dollar valuation for a private company, the unicorn status, is happening quicker. So as of the peak of the last couple of years, we saw that 60% of unicorns became unicorns in less than 7 years. Go to our next slide. So how do we then see the climate tech industry as it exists today? There's many ways to slice and dice this, but for large buckets, as we can think about it in terms of mitigation, adaptation, and then I would say there's also decarbonization. I think we can we can put that under mitigation, geoengineering, and then understanding and research. So what we know here is that you may have a particular thesis, a particular thing that you are addressing. So not all investments may be to directly remove or reduce emissions. Sometimes the adaptation to a changing climate matters. And that could be, crop substitutions. It could be, shifting demands for food and things like that we do in order to cope with climate change. Geoengineering is an interesting emerging area where we're seeing how we can compensate through emissions through how we change and engineer our climate. And there are opportunities for research, for data, for analytics, an area I'm very interested in, which we can think of as research and understanding, which is how we enhance our understanding of the climate itself. Go to the next slide. So here we have we have some excuse me, some tangible areas in terms of how this shows up. So This isn't exhaustive. There's new technologies and new opportunities being created all the time, but you can see the investments that are being made fall largely into energy, then in food and land use. There's a lot of attention, of course, the last few years in transportation with electric vehicles and so forth. There's what we can think of as the built environment, which we used to call prop tech, but now prop tech seems to be climate tech increasingly. There's carbon specific types of business opportunities. Managing the climate. So you'll see a number of things listed here, and then industrial, which is huge, and for now seems to focus on the large emissions parts of the economy. So extractive industries, manufacturing of large industrial products like steel or cement or things of that nature. But all of these areas are becoming subsectors in of themselves. But in terms of general understanding, we think about these like large 7 buckets. Now, why am I emphasizing that? It's because we may not always have the same match in terms of investment into those areas. For example, as I said, a lot of attention on EVs, less in decarbonizing cement. Now, when we think about angel investment and evaluation and climate impact, that's how we get to climate tech investment evaluation, because there's a synthesis in terms of like, okay, I want to invest as an angel. I want to think about the team, the tech, the TAM, all that stuff. But also I'm thinking about how many gigatons does this, reduce? How will this impact equity? How can we do this faster, given the rate of warming and things of that nature? And so as we put these 2 lenses together, we get what we think of as the rubric for climate tech. This is also being described historically as things like triple bottom line, right? So we think about people, profit, planet. That's our climate impact, the return profile, and what this means for society. And the complexity is sometimes something that we think people need to look at differently than other sectors, because you have this regulatory or government funding or fiscal and tax advantages and support that are provided to some of these technologies and transitions. And so that's something else to keep in mind. Great. So as I said, right, like a lot of the greenhouse gas emissions come from a few different areas. That's not necessarily where we've invested. So a lot of attention has been on transportation, maybe a bit less of investment, relatively speaking, has gone into to the built environment or into agriculture. So just wanted to emphasize that image on the left here as how we see this potential mismatch, but that means opportunity for future investment to address these areas. Next slide. Okay, so as I said before, there were 60 unicorn, 40 unicorns. Yes, as of 2021. Today, now we have 83 climate tech unicorns around the world that are now valued at over $180 billion, right? So this is definitely indication that we are at maturity. This is not just a whimsical thing. We see that there's a lot of large companies that are being built and have been built. You see a lot of IPOs captured here as well. We expect more of them to follow as trends continue. So something to keep in mind if anyone says, like, isn't this a niche thing? It's not a niche thing. Next slide, please. So the mother of all markets, an economic investment opportunity for a lifetime, as some analysts are calling it. So angel investing is just getting on the ground floor and having the privilege to be part of getting the ball rolling. So thank you. Over to you, Jen.
Okay, so I'm going to briefly talk about the role of AI in climate tech investing. So not only are we looking at investments at the intersection of climate and AI, but we're also looking at how can we use AI to improve our climate tech investing. And what we found is that we can use it at all levels of investment, from thesis development to finding startups using various different AI systems for research, to selecting startups or building machine learning models to recommend whether or not to invest in an opportunity. And data-driven VC has shown that machine learning models are proven to outperform human investors in screening startups. So that's pretty interesting. We can also use it for diligence, for research about companies, for writing memos, keeping in mind privacy and confidentiality restrictions, for supporting portfolios or identifying opportunities that we need to do so. For investor questions, AI can also be seen as an investor co-pilot or as an investor mentor. In fact, I have an AI agent of myself that I'll put in the chat later that you can try out as a mentor. And also curious to hear what uses or tools you like, and feel free to put those in the chat. And then in terms of investing at the intersection of climate and AI, there's a number of different ways to look at that. The role of AI in climate includes things like, gathering and monitoring data on emissions, optimizing processes. Cool Earth Forum buckets it into energy, manufacturing, agriculture, transportation, and materials as different applications of AI in terms of climate investments. And G2 puts it into a framework of data, algorithms, and hardware leading to applications. There's also applications of generative AI that companies are using. And a watch out, of course, is the impact of AI usage on emissions. And there's various companies working at reducing that impact. So some examples are using AI to power or leverage things like satellites, weather forecasting, traffic management, energy efficiency systems, AI-enhanced agriculture, AI for material science discovery and green battery development, using AI to locate ideal locations for clean energy, and applications in fusion and hydrogen. And I just thought I'd highlight a couple companies. Too Good to Go is using AI for reducing food waste, by notifying grocers of food that's getting ready to expire. Orbital Materials is building novel solutions for clean air, water, and energy with AI. One of my favorite startups that recently raised is Climate Policy Radar, which is using AI to help companies navigate climate law and policy research. They have a great AI-powered search engine. Also, there's companies like Living Carbon, Verse, and Streamline Climate, and DeepMind demonstrated 17% energy savings when using AI to control HVAC systems and data centers. So while DeepMind is not, exclusively climate focused, they have managed to use AI for climate, and there's a lot of others. And feel free to put in the chat any roles or examples of climate and AI solutions or companies that you like. Here's a great...
Just a reminder that you have 1 minute left. Yeah.
Sounds good. So just wrapping it up here, there's some great canvases like this one from Climactic and this one from Xange that you can check out online to learn more about different climate companies. And just a brief note about Climate Angels. We have our next 6-week program coming up starting April 18th, which includes great speakers, assignments, learning, deal flow sharing, invitation to our Slack, and a capstone project to put all your knowledge together, where we go through everything from thesis to sourcing, selecting, building syndicates, executing deals, and nurturing portfolio companies. And with that, I would love to answer any questions that you might have. And thank you so much for listening and your interest in climate and AI. And just a reminder, there is no planet B, so let's work together to make our world a better place.
Awesome. Thank you so much. Thanks to both of you for this fantastic presentation. So now we can move to the discussion. I've already seen some really interesting questions from the audience, and I would like to urge you to ask your questions, follow the Slido link, and we're gonna discuss this in a second. So first we're gonna have a brief moderated discussion. And I would like to start with a focus on the investment decisions that you make when you thinking of investing in climate tech. So I was wondering if you could explain again, you were talking about this important concept of climate tech investment requires both angel investment evaluation and climate impact evaluation. So I would like to ask you how do you balance these two against each other, and what kind of information do you collect to make this climate impact evaluation from a startup or a company? And maybe I can ask Vijay first to answer this, and then you can jump in if you feel like you would like to answer this.
Yeah, so the question is, how do we make investment decisions? I think all good investment decisions have to have a very disciplined process, and we try and design a process that means, an individual has to really champion it. So what does that mean? It means someone is taking responsibility for connecting with the founder, learning more about what's happening in our syndicate, and also for investing their time and developing conviction there. And the benefit there is you don't have group think or consensus off the bat. It also allows multiple different theses to emerge. What is a thesis? A thesis is something that allows you to say what you're investing in at what stage, in what theme or sector or trend, and to also say no to many things. It's not a good thesis if you're not able to say no to things. So you have your thesis, that person has their approach, they have to do their homework, they have to write a memo. The act of writing forces our analysis and the synthesis into telling the story of the company and why this company, why this team, and why now. And so that's how we're able to then bring that to investment committee, get sign off, and then then find how the syndicate wants to come together and support that business.
Thank you. So maybe Jennifer, you want to add something about how you really make this climate impact evaluation? Like what kind of data are you looking at, or what kind of information? Because you talked about investing in technologies that really reduce emissions, but how do you make this estimation of which technology might be promising to actually reduce emissions and the amount?
Yeah, that's a great question. So there's a couple different tools that I typically use. So I use Project Drawdown as an initial sort of gut check in terms of looking at their table of solutions and the order of impactful areas. For example, if it's food waste, I know that food waste is one of the top areas within the Project Drawdown table of solutions that could be impactful in terms of climate. But then what applications are there within that, food waste? Like what exactly are they doing within that? And what does the startup estimate as their climate impact? And then I like to gut check that by seeing, has the lead investor also vetted that? We also have some different calculation tools that we leverage. For example, there's some different reports and tools online that help with calculating the climate ROI. So there's the financial ROI, but then there's also the climate ROI, some call the CROI. So basically the amount of climate impact you can make with your investment.
And do you have like a threshold or something after which you feel like this climate impact is big enough or sufficient for your decision?
Several investors have said they look for at least a gigaton of impact. Some people have said 2 gigatons of impact. Some people have said half a gigaton of impact. I try and look at a gigaton of impact. I try and invest in kind of the top 10 areas within the Project Drawdown table of solutions, but sometimes I'll also consider others because you know, it all adds up, and it can all be helpful and important.
Maybe a question to Vijay. Thank you so much for this answer. It was really interesting. But what advice would you give a climate tech startup to get in touch with an investor and attract funding? I mean, you've shown some tools or ways you use to find interesting startups and companies, but what would you give as an advice?
Yeah, I'd say there's a lot of ways. I'll sort of describe the easy way, which is you have investors in your network, you reach out, you tell them, hey, I'm working on something. They meet with you, they get interested, excited, they want to follow up with your progress, you give them updates, and then when it's time to raise, you have a relationship with them. So I think the key thing is don't always be raising, because it tells the investors, well, this person is just still out there in the market, just talking to people and not closing money. So you're always networking, you're not always raising. In fact, I know successful founders who would always tell VCs, "Oh yeah, we're not raising. No, we're not. We don't want money right now. We're just really focused on building the business. No, things are going great, right? And or something like that. And which is possible once gotten off the ground. And why am I saying this? Is because psychology is very important when it comes to investing. So describing momentum, and that can be the energy, the team you're building, the experiments you're running, the prototype you're working on, whatever that looks like, that momentum needs to feel like a train leaving the station. And so that doesn't mean you're on social media constantly bragging about stuff and not doing it. You have to develop a reputation, but through different groups and organizations, collectives like this, and so forth, of someone who's got both a vision and ability to execute, because that ultimately is what your investors are buying into. Now, in terms of the networking and outreach to different groups, there's different ways to approach that. Some people like the accelerator approach, because that is kind of a programmatic way to build your company, to find investors and to pitch them and that kind of thing. Whereas others are going to take a more or organic, perhaps longer styled approach to go out there and say, what, here are the people whose thesis matches what our company is. And that's really important, because you're just trying to find someone who already believes in a world that you're building. And that's where the investor thesis company fit has to make sense.
Okay, thanks. That sounds great. Makes a lot of sense. So what would you say is required to attract more private investment in climate tech? How would this also in competition with other sectors and other technologies that might even contribute to emission reductions?
Well, as we know from the recent data, and I'm pretty sure we have a graph on this in our appendix, is that the percentage of dollars in venture capital that are going into climate is increasing. So in absolute terms, in the last couple of years, because there's been a shrinkage in venture deal volume and dollars deployed, it looks like there's a little bit less money coming into climate. Actually, it's becoming a bigger and bigger part of the overall. So what does it need to continue and to start getting bigger in absolute terms? It means that there are clearer pathways to commercialization and distribution and scaling, and that requires these startups to execute. It also means that you have to have people who believe earlier, that can be angel investors, or it could be others, to provide grants, to provide angel checks, to to catalyze financially, and as well as with the support of those skills and talents and superpowers of the angels and or institutional helpers. And that's what's going to move things, right? Like the downstream capital has to invest in in what has been built and what has been realized. So to get that traction, we need to take the steps we can to promote and support those that we believe generally are going to be successful and are worthy of our time and capital.
I understand. Okay, thank you. A question to Jennifer. So I would like to focus a bit on a specific technologies within the field of climate adaptation. So we know there's really a big need to scale up mobilization of private finance also for adaptation and especially for climate action in the global south. So I was wondering, what would you say, what are the current opportunities and barriers for investment, especially in climate adaptation technologies, and what is maybe needed to attract more investments there?
Yeah, I think there's a lot of different opportunities. Like one of the biggest ones that I see is in the area of air purification, because with the increasing, in certain areas, wildfires, and in other areas like pollution, it's becoming very difficult for folks to actually breathe healthy air. And so I think there's opportunities for air purification in many different settings, and AI could perhaps be leveraged towards that in certain ways. But yeah, I think that investments into developing countries or the global south could be a huge opportunity. I know a number of investors who've set up shop in India or are making trips to India to find climate investment opportunities, because it's an area where you can make a big impact, and there's also a high potential for return. And since we're all kind of living in this world together, even if you invest as all your money in the US, there's still going to be emissions coming from elsewhere. So we really do need to invest everywhere, and we're seeing innovations come from all over the world as well. So more so than most other sort of investment areas I've seen, a lot of investors seem to have a global mandate or focus within climate, whereas in software as a service, they might focus on a specific geography like the US or Europe or something like that.
Yeah, makes sense. Thank you. I think we now move on to the questions from the audience. So there have been like a couple of really interesting questions. I've got a huge list. So one question was regarding the footprint, the sometimes really immense carbon footprint of AI technologies itself, and how, in light of that, it can be justified to invest in such technologies. Maybe Vijay, you want to say something about that or answer to that?
It's a very thoughtful question, right? Like, are we going to invest in something that will be consuming a lot of energy? The question is, where did that energy come from? So was that from high emission sources? And we can think about how we want to support the growth of AI and use that as a way to catalyze and encourage more investment in cleaner and low emissions energy sources to provide that power. That's the first thing. The second thing is, I've personally experienced how AI can be used to improve the climate by lowering emissions and lowering power usage. So I'm an investor in one company that uses AI to help data centers to reduce their power consumption. And data centers are very power hungry, and data centers use a lot of water. There's a clear environmental impact here. If you can use AI to do what we haven't accomplished already and have a substantial reduction in that power, then it's very much worthwhile. So we can use this technology to do any number of things. It's our responsibility as business people making decisions in our companies, as consumers, and so now as angel investors, to vote with our dollars and our euros and what have you, to make other choices. So it's up to us to direct this as we want for the outcomes that we believe in.
Yeah, I think that's a very good answer. I mean, the source of energy is definitely important to look at that, and also collect data in the first place on the emissions of AI technologies. Yeah. So when we talk about, sorry.
Oh, sorry.
Yeah.
I was just gonna say, I think we're really looking for a net positive climate impact. Like if the AI is helping reduce significant emissions or having a very positive impact, then you would have that and then subtract the climate emission of that AI. And if it's a net positive impact, then that's probably good to go.
So what would you think? There's also a question related to that, how there's a potential impact for AI solutions in supporting industries like sustainable finance and policy that do not have direct impact, so that are like, where the technology is not directly maybe linked to the emissions. Maybe you wanna
go ahead, sorry.
No, go ahead. I just want to ask you if you want to answer this question.
Sure, yeah. So Terra.do recently put out a great climate impact guide of different organizations, and they tiered them based on, tier 1 direct climate impact, and then lower down in the list is organizations that may not have a direct impact but are still important, or as Project Drawdown puts it, are cross-cutting across the different solutions like finance, policy, etc. And I think those are really important as well. And there's lots of AI applications to those, and we can't necessarily advance without, proper support in terms of increasing finance and climate positive policies and so forth. And so that site Climate Policy Radar that I mentioned is a really great example of that, which basically takes all the climate policies and laws and puts it into a searchable format using AI to summarize it, which is great because there's so many companies that are struggling with, okay, what climate policies are there, which ones are there that are anticipated, and how do I comply with that? I mean, these documents are like, in some cases, 600 pages long, making it very difficult for them to go through it. And so companies like that really help. There's also some interesting ones in the area of sustainable finance. For example, the founder of Kiva.org created renewables.org, which allows anyone to invest or loan as little as $25 to funding solar projects in the global south, which they show through some data has some great impact. And there's other platforms too that allow people to invest and increase their amount of investment or loans into climate projects, and some of them leverage AI.
Yeah, when you talk about data, what do you think, what kind of infrastructure is required so that governments and investors can act quickly regarding the huge flood of new climate information coming in? The question, one of the questions was especially data or information coming from AI and machine learning innovations like EDFs and Goose methane sat. Yeah, so you're talking about specific providers of information or using AI for collection, but what kind of infrastructure would be needed? Maybe, Vijay, you want to answer this, or?
I don't know yet. It's a really good question. We're trying to see what infrastructure is needed. Infrastructure is usually like built in service of some application, right? And so we're still seeing these large enterprises, institutions, decide what it is they're trying to accomplish, what they should do. So maybe this is still a wide open area for founders, for startups to be experimenting, because the jury is still out for now when it comes to that field. I don't know if Jen has a different opinion.
Yeah, do you want to add to that, Jennifer?
Yeah, sure. So I think there's a lot of different, aspects that are needed, like reliability, security, speed, and sharing. I just put in the chat Al Gore's project, Climate Trace, which has an open emissions database of more than 352 million assets. So that's pretty interesting. And I think having more open data, whether it comes to, water and different metrics about water or air or emissions, will be increasingly important.
There's another question in the chat on this investment decision. So the question is, can we get the same returns from climate investing compared to other industries? And do you balance the risk you take versus deeper tech versus faster and safer angel investments?
Sure, I'm happy to talk about that. So I think you can, in some cases, get the same returns from climate investing, in some cases lower, in some cases higher. It really varies on what the investment opportunity is. There's been some interesting talks about, climate tech investing being perhaps the biggest market opportunity ever, because our whole world is being recreated. Let's think about planes. Now we're going for electric airplanes and hydrogen airplanes. And so, all of our planes might change over. Well, that's a big investment opportunity, as is all the cars changing over, all the homes changing in different ways. So that's why a lot of people have called it, the biggest market opportunity. And some have even theorized that sustainable investing could be the dominant asset class going forward. And then I saw a follow-up question: do you balance risk you take with deeper tech with faster ROI/safer angel investments? Like, I don't particularly. I used to invest more so in non-climate investments with some climate investments, but now I'm focused exclusively on climate. And within that, I don't necessarily look for a certain allocation of, deep tech versus software only, for example. But other investors have different theses, and some focus on climate software exclusively.
Yeah, my focus is, for example, on climate fintech, which is the data analytics, payments, and marketplaces that enable climate finance to happen. That has a totally different risk and return profile versus something that is going to be far more hardware centric. One isn't better than the other. It's just fundamentally different, in the same way that investing in a public company like Tesla is different than investing in another public company like Alphabet. They're just completely different creatures.
Yeah, makes sense. That's very interesting. So we have 2 minutes left. I would like to ask a last question, and with a focus on academia and research, since a lot of Climate Change AI members and participants in our events are actually from academia, students or researchers. So the question is, how much, when you evaluate investments, how much do you talk actually to researchers and experts? And how would you say that we can link investors' interests to our scientific research? And I would like to ask you to answer this very briefly before we wrap up.
I think the answer is we don't do enough of it. We should do more of it. The best VCs have a practice of reaching out to a network of experts.
Yeah, I'll just follow that up to say, certain VC firms and also angel groups have partnerships with universities or expert networks or PhD students. And so I think that's a really great area that researchers and academics can help out with, is helping provide insight on which investments have the most climate impact and are the most robust technically.
Hey, thank you so much. We're already at the end of this webinar. Thank you so much for joining, to both of you, Vijay and Jennifer. It was really a pleasure to have you here and get your insight into climate tech investing and angel investment. And yeah, with that, I would like to thank you and goodbye.